Hello everyone. Got a good one for you today. Actually, I got a few good ones. In today's video, we're gonna go into predictions. I mean, that's what everyone came for, right? So first though, as like a disclaimer, this is not a recommendation to buy or sell any security. Like I don't have a dog in this fight either way. And I'm just a guy on YouTube. So if you go play some 50-to-1 leverage trade off of some guy on YouTube, just, live with the consequences either way, I guess. So that's your disclaimer. I'm not a licensed fiduciary. I'm just a guy with some business and trading experience, giving you what I got. I'm just gonna get right into the predictions and then maybe stop at points where I can explain how I got to that, conclusion. Maybe I can unveil a little bit of methodology for you guys around how I come up with this stuff. So first, we're gonna start with the stock market. I predict going through to the end of the year, stock prices start to move back up, and then maybe even take out new all-time highs as early as this year or next. I really do not think the NASDAQ and the S&P and the Dow Jones are just gonna keep coughing up 1%, 2%, 3% a week. Like, I think we're almost through that. Generally, indices, when they pull back about 20%, your plunge protection team at the Federal Reserve steps in anyway. So right on the border of a bear market, that's actually usually a really good time to buy. But hey, we'll see. For all I know, the markets could crash tomorrow, so go easy on me. But I say stocks are done selling off. And I say especially growth stocks that don't pay a dividend. High growth tech, I especially think that's done selling off. So I think ARK ETF, Cathie Wood, that whole group, Elon Musk, Tesla, all those, Amazon, the FANGs basically. I think the growth stocks are about to come back really hard. And the value stocks, which have been catching a bid lately because they're kind of dollar dependent. They need a strong dollar for them to be worth holding. I think those are going to start taking the back seat again. So like your safe stocks like Walmart and Procter and Gamble and stuff, I think we're kind of done with that, and I think we're going to move into a more or less like a real hardcore NASDAQ run. So like maybe NASDAQ like, 16, 17, 18,000 sometime this year, and it's like 11,000 right now. So that's big, especially because a lot of people are saying the exact opposite. They're saying, nope, rates are going up, stay in growth, maybe even leave the stock market, add some cash, add some bonds. This is it. I'm saying no. I'm saying what you went through in 2020 and 2021 is going to come back, and that we're just in a little dip before all those themes that you saw last year return. I don't think we're done. So stocks, I say, are soon going to start going back up, all three major indices. Could be wrong. But if I'm right about that and tech starts to do really well, I think bond yields maybe will stay stable around 3% on the 10-year, or maybe even fall below 3% and then start really going lower. I could see a situation where the 10-year kind of hangs out here, is stable, so the bond market doesn't really scare anyone, and then maybe even yields and rates start falling again, and then the dollar starts falling again. So that's my next thing. So if I think the bond market is just going to be like semi-stable, it's just, the bond market's going to be fine basically. And I'm not a bond trader, so as long as the bond market's, not imploding, we're fine. And I say a lower yield on the 10-year, or even just stable yields or lower. But I don't see yields continuing to rise. I don't see like a 5 or 6% 10-year treasury yield. Like, I don't see that in the cards. Could be wrong. But I say yields are going to level off or even start falling again. Same with rates, interest rates. So I say mortgage rates are pretty much already at their like part where they scream uncle, ah! Because if mortgage rates keep going higher, it really starts to do a lot of damage to the real estate market. I say we're done with that. I say if anything, mortgage rates kind of stay level or start to fall slightly, and then home prices actually start to go up. So I think right now, like right as I'm doing this video, home prices might be in a tiny dip, but nothing crazy. So I think if home prices have kind of slowed their roll, tiny dip, put it this way, they're not doing 20% a year anymore. Like, my gosh, the run we've seen in real estate. So we've ripped 20-40% higher in the last 2 years. I say we're not done ripping higher. We're in a little dip right now, but I don't think real estate's done. I don't think at all. Gold higher. I think gold starts to go higher, not 5,000, 10,000. Oh my gosh, everything imploded. The gold bugs were right, but just gold keeps doing the cost of capital, and the cost of capital keeps rising. So maybe like end of this year, like $2,200 gold, $2,250, you know, something like that. Like silver down in the gutter at 23, I think needs to maybe come up to like 35 or something, but the premiums are already putting it at 35. It's funny how the spot market for silver is saying the price is down there in the dumpster at like 22, 23. And then if you go to a coin shop, they're like, no way, dude, you're not buying it for 22, 23. You're buying it for like 36. That's funny how the market is like trying to fix itself. Like the spot market has become so divorced from the prices and the premiums people are paying now. I find that so funny. So I think silver has been really suppressed and will start moving up. Nothing crazy. I could see though, like maybe 93 an ounce silver by like 2025, 2026, something like that. So I do think silver is relatively undervalued, physical, and would be a good buy. I would never buy the derivatives like a silver ETF or a silver mining company or a streamer. Like I don't do that. But like, you know, physical silver is probably pretty undervalued right now and about to start moving up. So we have stocks going up, specifically high growth tech stocks, value stocks kind of like chilling a little bit. The bond market just kind of being stable. Maybe yield slightly lower, mortgage rates maybe slightly lower going into the rest of the year, and then house, that'll allow home price tags to kind of keep escalator and up, you know, everything goes up an escalator and down an elevator, you know what I mean? So I think real estate's going to continue just kind of like doing its thing, moving up. I think gold's going to move up. I think silver's going to move up, but nothing crazy, not the end of the world. I think oil is going to move up. So oil at 120 WTI crude right now, which is destroying everybody, like all the common, like everyday citizens, you know what I mean? Warren Buffett has 50 million shares of Chevron stock he bought in 2020, so I don't think he's really worried about 120 WTI, but a lot of us are really starting to get strained out, you know, by that. We've discussed it. But I think oil is going to continue moving higher. I think maybe by 2025, 2026, oil could even be $350 a barrel. That's another 3x from here. So take gas prices now, times that by 3, we could be there in 4 or 5 years. So I think I got a pretty high target for crude oil, WTI. I think we're going like, you know, 300 to 400 a barrel next few years, 4 to 6 years, 2 years. That's actually more reasonable than it sounds. I hope not. I hope I'm wrong. Throw trash at me if I am. But I think crude has got a lot of room to run higher. So we did the stock market, bond market, real estate, gold, silver, crude oil, interest rates and bond yields, kind of talked about how that's going to set the tone for everything. I think as we continue hitting this demographic wall, I think maybe in the next 4 to 6 years, maybe by 2028, we're selling more adult diapers in the United States than baby ones. That's kind of a weird prediction, but I'm just looking at demographics. So as this population ages, maybe in the States, we would start to see news headlines like, oh my gosh, more adult diapers are being sold in the US than baby ones, you know. But that's also not because we're not having babies, the millennials and Zoomers. It's not so much that, even though they're not, it's the boomers. It's just that big. It's that big of a demographic wall. So like that's some weird stuff, like maybe old folks' homes will start doing really well. But remember, the market is working on as complete information, like not complete information, but quite complete information. So the market's also already knows, you know, they already have trends for what adult diapers will be, you know what I mean? Like that's a lot of that's already baked into share price and stuff too. So be really careful. What do I see happening? I see the dollar just getting killed in its current form. The dollar in its current form gets killed. We eventually start using MMT, modern monetary theory, at like a macroeconomic policy level. Like we really start to embrace that. And so what will you see with MMT? You'll see massive government spending, massive inflation in certain sectors of the economy that are going to get reined in with taxes. MMT really is really fake dollar, fake money type policy. It's the whole idea is economies are like plumbing, and as long as you're just sending massive amounts of dollars to like the correct places in this machine, like everything works out. But really you're just centralizing control more and more. So I don't think MMT is a positive trend, but hey, could be wrong, and there's a lot of MMT people out there. So we're Keynesian economists now with our policy. We're going to become more MMT-like. So if you want to get a beat on everyone and be ahead of everyone, go ahead and just start studying MMT now and start looking at MMT at a policy level and what that might entail. Could be wrong. Maybe we'll stay more or less Keynesian. Larger trade deficits until we start to like really repatriate our manufacturing and start exporting a lot of stuff. But you know, I'm looking at larger trade deficits. More automation and AI, which is deflationary. It's weird. We'll talk about that in a different video, but more automation AI. So like more cashier jobs are just going to be going away. And where are they going to go? Honeywell share price. You know, whatever company makes the machine, the U-scan machine at the grocery store or wherever replaces the cashier, the kiosk at McDonald's. Yeah, we're going to keep seeing more and more of that and less people, because people are variable expenses, and these big, getting now cheap, technology is a good fixed expense. So you're going to see more AI and automation, like getting rid of jobs. There's nothing, you know, I'm not here to say good or bad. I'm just saying automation and AI is going to keep sinking its teeth. I think the metaverse is going to keep getting big. I think the metaverse is going to actually continue to dematerialize, like casinos, retail, even like clothes. Like people are starting to buy clothes for their avatar in the metaverse. That's going to steal market share from like Macy's and Amazon and stuff. It's crazy. So look for constructive trends and opportunities inside the metaverse, because it's not just like games and puzzles and watching cool movies. The metaverse is something crazy. So if you're still behind on that, maybe look at that. Like I see more you know, digital real estate and also just all sorts of like weird company coins and tokens that have utility around like the metaverse. I also see just more company coins in general. So like instead of doing an initial public offering like an IPO and take your company public and have it be a publicly traded stock, I think we'll see more ICOs, so initial coin offerings, and people start tokenizing their companies, tokenizing real estate, just tokenizing everything. So I think blockchain is here to stay. With that being said, I think Bitcoin is pretty overcooked at 30. So I wouldn't be surprised to see Bitcoin go back to 60 by as early as this Christmas, really. I think Bitcoin's been overcooked to the downside and is ready to reverse, potentially to do all-time highs, especially if we don't get the inflation situation under control. And I don't think we will for the next 6 to 8 years. So I think Bitcoin's going to start moving up. I think the altcoins are going to start moving up because they kind of follow Bitcoin, and they'll definitely follow the NASDAQ too. So that's kind of how I see it. I think the places to be based on my predictions would be high growth tech, no bonds, not a lot of dividend stocks, like safe, like value stocks. Maybe a dividend stock like, not a buy or sell recommendation, but you have like the big giants like ExxonMobil, Chevron, stuff like that. Like you could look at stuff like that. And so that would be a fine dividend. But so I think oil companies will do fine. I think high growth tech will do fine. I think value stocks won't do so well. They'll be okay though. I think bonds are a bad place to be. I think physical gold and silver is a good place to be. I think Bitcoin's a good place to be. I think the metaverse is a good place to be. But I'll probably do another video on the metaverse and explain that. And I think the demographic issues are going to persist. I think inflation is going to persist, maybe next 6 to 8 years. It really depends. Does the Fed want to bite the bullet and take the prime rate above the inflation rate? So like 18%, putting mortgages at like 21, 22% again. Do they want to do that? People are saying they're going to, but I don't think they're going to do that. I think they're maybe going to keep rates steady from here, or maybe even incrementally raise interest rates a little bit, but I don't think the Fed is going to meaningfully raise rates or unwind their balance sheet. I don't see that in the cards. And that's going to continue to cause a lot of dollar weakness. So just sound money I like, oil I like, high growth tech I like, Value I don't like, bonds I don't like, the metaverse I like, Bitcoin I like. Crazy. What else do I got? I think we'll be on a digital dollar here pretty soon. Like, I know obviously we already kind of are. You have a Visa card, everything's plastic and digital now anyway, but I think the dollar is going to be more or less on a blockchain, like a CBDC, so central bank digital currency. I think that's kind of right around the corner. So you have like the Fed, they're already working on the next dollar, you know, because they want to stay the top of the fiat global Ponzi. And don't get me wrong, a blockchain dollar in 2025 will still be fiat, you know what I mean? It'll still be airdropped into everyone's wallets, like willy-nilly. They'll be, you know, handing out trillions. So I'm not saying like a new blockchain dollar is going to come and defeat Bitcoin in the crypto space. I actually think it's going to be rocket fuel for Bitcoin in the crypto space. But I do see like a new dollar, because we need a new monetary system. The one we're in right now, 50 years old, started when we defaulted on the gold standard in 71, drew it out as far as we could. But this whole like fake dollar, terminally low interest rates, terminally high inflation, like it's not sustainable. So the Fed knows that, and they're going to start working on a central bank digital currency so they can stay on the top of the Ponzi. I see the dollar being weaker the next 4 to 6 years or whatever. Like I said, I see the dollar being weaker for the duration of this credit cycle, but that doesn't mean weaker, you know, it doesn't mean weaker in relative terms. And what I mean by that is the dollar in its absolute terms, I say, continues to just kind of stair step down and fall. So pay more for groceries, pay more at the pump, you know, pay more for your little vain consumer goods or whatever. Like, the dollar's definitely going to get weaker, but relative to other currencies like the peso, won, euro, I think this, you know, pound, I think all those currencies are going to still stay below the dollar. So the dollar is going to maintain its position at the top of the fiat global Ponzi for the foreseeable future, next 6 to 8 years. But the entire fiat Ponzi is sinking in real terms, if that makes sense. But I do see de-dollarization becoming an issue, right? So like maybe I'll have to change my outlook on that. Whoever has the biggest economy is probably going to end up with the world reserve currency. And so maybe, you know, maybe it won't be the dollar in a few years. I hope it stays the dollar, but, you know, maybe not. Maybe it'll be, you know, who knows, the yuan or the euro, who knows? I mean, who knows? But somebody else could come along and take it. So I do see a problem the next few years with countries wanting to get rid of their dollars. I do see that being a problem, but I don't necessarily see the dollar falling against other currencies, if that makes sense. Not too much. These other fiat government issue currencies, they suck. I mean, the dollar sucks too, so we all suck. Everybody sucks together. But I mean, I'm not saying the dollar's going to collapse and then they're going to do great. I'm going to say the dollar's going to stay on top of all of them, and the whole thing is just going to keep falling and sinking into the mud. That's really all I got right now for predictions. I mean, I'm sure I've left some things out. Maybe I'll do another video depending on how this goes. I don't know. So that's what I got for you guys. Kind of a long one, but you know, one more thing. If you want to start making predictions that might actually come true, consider this. Study the institutions and the policymakers and how they behave and how they roll. Study the problems that they see coming. Study the policies that they're going to use to fix the problem. And then use all that information to guess the knock-on effects of that policy. And then while you're doing that, maybe pay attention to other players at the table that aren't lying to you, but be careful with that. You know what I mean? Like, be careful with a big banker telling you to buy or sell something for obvious reasons. Be careful of Mark Cuban telling you to buy or sell something for obvious reasons. You know, he might be telling you to buy, right, because he's trying to get the best price to sell. So again, be careful about listening to other people, but do pay attention to the institutions, the policymakers, the problems coming, the policies that you're going to use to address it, what the potential knock-on effects could, and know your history. So know how you got here. Put it all together and you might be surprised. Till next time.